The Economic Daily recently described gold as a risk asset, triggering widespread panic among investors. At the same time, gold prices have continued to fall, with domestic gold prices in China dropping nearly 50 yuan within a week. A recent fat finger trading error in Shanghai gold futures even caused a 17% flash crash within 1 minute, further shaking market confidence. Many people now wonder whether gold has lost its safe haven role. But the real reason behind the sell-off is not that gold became worthless. It is a liquidity crisis. When markets panic, large institutions urgently need cash to meet margin calls and debt obligations. Gold is one of the world's most liquid assets, meaning it can be sold instantly for cash. In contrast, junk bonds and collapsing stocks are often impossible to sell during a crisis. As a result, institutions dump gold first, turning it into an emergency source of liquidity. Another key factor is the Middle East conflict. Most people assume geopolitical tension should push gold higher, but in the short term, the opposite can happen. Why? Because rising oil prices increase inflation risks, making the Federal Reserve less likely to cut interest rates. Without rate cuts, capital flows back into U.S. Treasuries, which offer stable yields, while gold provides no interest income. At the same time, if energy supply routes, such as the Strait of Hormuz, face disruption, countries rush to secure US dollars to buy oil. Since global oil trade is still largely settled in dollars, this strengthens the dollar and puts additional pressure on gold prices. However, these are mainly short-term liquidity shocks and emotional reactions. They do not change gold's long-term fundamentals. Gold's long-term value is tied to confidence in global fiat currencies, with U.S. debt exceeding $34 trillion and governments worldwide continuing aggressive monetary expansion. Many central banks are reducing UST, Treasury holdings, and increasing gold reserves. The long-term trends of de-dollarization and global fragmentation remain intact. For many countries, gold is still the ultimate reserve asset and the key source of financial security. In investing, short-term volatility is noise. Long-term trends are what truly matter.